Hey guys, it is Julie here with TipRanks, and today we're taking a look at two stocks that JP Morgan has named top picks for 2025. So let's get into it. All right, everyone, welcome back. Thank you all so much for being here and TGI Friday. I hope you guys have some fun plans for the weekend ahead. Today, we're taking a look at two stocks that analysts from JP Morgan has named as top picks for the year ahead, rating them a buy with some double-digit upside potential. So we're going to take a look at these companies, what it is that they do, and how the rest of Wall Street weighs in as well. This is a quick reminder before we get into today's stocks that if you enjoyed the video, make sure you hit that thumbs up button and that you're subscribed to the channel. Don't forget to download the TipRanks mobile app so you can access all of your favorite investment research tools on the go. Links will be in the description down below. Now let's get right into our two JP Morgan top stocks. Number one on our list today is Vistra Energy. They trade under the ticker VST, currently priced at $140 per share. Now, this is one that we have talked a couple of times about before over the summer, around the end of June, and then again around the end of August. Year to date, the stock has climbed 256%, and in the last 3 months is up 76%. Vistra is a utility-scale energy company. This Texas-based electricity provider is the largest competitive power generation company currently working in the U.S. market, with approximately 5 million customers and 41,000 megawatts of electric generation capacity. They boast a market cap of over $48 billion, a workforce 6,800 strong, and a wide range of power facilities that include gas, coal, nuclear, and solar generation capacities. In addition, they have a strong commitment to producing zero-carbon power. Its nuclear power generation capacity is the nation's second largest. Last week, on November 7th, they did share their most recent quarterly earnings report, where we did see some mixed results with a miss on earnings, but a revenue beat. For their third quarter, they reported earnings per share of 94 cents, which did fall 22 cents short of analyst expectations, but revenue did come in at $6.28 billion, and that did grow over 53% year over year and exceeded analyst expectations by $1.27 billion. The company also raised and narrowed their 2024 ongoing operations adjusted EBITDA and initiated guidance for 2025. Taking a look at what our JP Morgan analyst had to say about Vistra, he said their top pick, Vistra, offers the optimal mix of all angles in their view. They see very attractive upside from current levels with a healthy step up in a blue sky scenario. In addition to nuclear upside, they see meaningful gas power leverage for Vistra, particularly as islanded gas in West Texas and Appalachia should support spark spreads, particularly given Permian electrification demand growth and a great call on gas. And a second analyst, this one from Seaport Research, also mentions Vistra as one of their top picks. They recently bumped up their price target, saying that thermal IPPs are expanding their gas and nuclear plants under long-term contracts, and yet no one tries to strip out their DevCo-related overheads or sign billions to their internal plant development capabilities. They said Vistra remains one of the firm's top picks for thermal and renewable power IPPs. Overall, Vistra has 10 current analyst ratings and does come in as a unanimous strong buy. The average price target comes in at $156, implying an upside potential of over 11%. Looking at those price targets down below, on the low end, we do have a buy rating that we've already surpassed in price, so it has a downside of about 3.5%, while our high-end price target is $231 for an upside of 65%. And number two on our list today is EverQuote. They trade under the ticker EVER, currently priced at $17.60. This is another one that we talked a while ago now. I think it was February or March here. Over the past year, the stock has climbed over 100%, but is more recently in the red. Over the last 3 months, the stock has fallen 20%. EverQuote is an online insurance marketplace. Their platform connects the players in the insurance industry, allowing agents and agencies to publicize their offerings and buyers to browse, contact, and choose. The company's umbrella covers most aspects of the insurance industry, including such major products as life insurance, car and vehicle insurance, and home and renters insurance. The platform is designed to be intuitive and easy to use, and agents can post policies along with pricings, and buyers can use search functions to locate the best products for them. They shared their Q3 earnings report on November 4th, coming out with both an earnings and revenue beat. Their third quarter earnings per share came in at 31 cents, beating expectations by 9 cents per share, while revenue came in at $144.5 million, beating by over $4 million and growing over 150% year over year. Their variable marketing margin increased over 125% to $43.49 million, and they delivered record third quarter results for revenue, marketing margin, and adjusted EBITDA. Hearing from an analyst at JP Morgan, they did comment on the stock's decline in recent months, plus this strong quarter. They said that Ever reached record revenue and profit in the third quarter, but expect healthy auto carrier growth to continue into 2025 as more states reopen and carrier spend broadens. Shares have traded down since their second quarter earnings on investor concern that the auto carrier recovery is mostly played out and uncertainty around the pending one-by-one consent rule. But we think the insurance cycle still has more room to run, with impact from the one-by-one consent change manageable. And to provide context, that one-by-one consent rule is about consumers having to provide explicit written content to receive marketing materials. Now, we also heard from another analyst at B. Riley. They reiterated their buy rating, but did slightly lower their price target, saying that new consent requirement will present some near-term headwinds for their third-party agent business, but they remain encouraged by the sustained strength of the auto insurance recovery, as increasing spend from a broader set of carriers and higher population states potentially coming online should provide nice growth tailwinds in 2025. With 6 current analyst ratings, EverQuote does come in as a strong buy with 5 buys and 1 hold. And it seems analysts do see a lot of room for recovery here, as their average price target of $31 would imply an upside of 75%. Looking at those price targets down below, our low-end price target does come from JP Morgan with a still very impressive upside of over 58%, while our high-end price target is here at $35 for an upside of over 98%. So that is a quick look at 2 stocks that JP Morgan has named as top picks for 2025. Let me know your thoughts on these companies in the comments down below. I always love hearing from you guys, and please keep in mind these videos are never a suggestion to buy or sell any specific stock. Please make sure you always do your own research and due diligence. Thank you guys so much for watching. Have a fantastic weekend, and I'll see you back here next time.